And now, ladies and gentlemen, we'll have a panel discussion. This is on clean energy transitions on Southeast Asia. I take pride in inviting our panelists at this time. I'll mention their names one at a time as I invite them to make the way on stage. We have Esther An, Chief Sustainability Officer, City Developments Limited; Eric Lim, Chief Sustainability Officer at UOB Group; Frank Puan, CEO and Executive Director at Sunseap Group; and joining us virtually, ladies and gentlemen, are Tim Gold, Chief Energy Economist, International Energy Agency. The rest of you, once you're ready, you just make your way up and we'll get it organized as soon as possible, yeah? And we have also Philippe Delorme, Executive Vice President, Energy Management, Schneider Electric. Now, moderating this session, ladies and gentlemen, is Mriganka Jaipuria. She is the head of News Asia S&P Global Platts. Now, ladies and gentlemen, do enjoy this session. Mriganka, I'm going to leave the fort and the moment to you.
Thank you. Hi, everyone. A very warm welcome, and a very warm welcome to our panelists. Like I was telling some of them, I have a very diverse set of panelists here, some of whom work in industries that I have never touched before because my expertise is in commodities. So I'm really looking forward to learning immensely from this panel. We have 45 minutes and we have a really interesting topic to get through. So I'm going to dive straight in. And my first question is going to go to Michael. We're talking about a clean energy transition, clean, sustainable energy transition in this region. And what I want to ask you is, what is the path going to look like? It's obviously going to look very different to what it does in other parts of the world. So what are your views on what this path is going to look like for Asia?
Well, thank you very much for the opportunity, and also I convey my regards from Tim Gould, who was not able to join the session today. So we just heard from the IEA's Deputy Executive Director on the global outlook, so I'll try to give some sense on what the pathway could look like for Asia, and specifically focusing on the emerging and developing economies of Asia, setting aside China for now. I'm just focusing on South and Southeast Asia. So one of the themes that we continue to emphasize over the years is that economies in Asia continue to industrialize, to urbanize, and to electrify. We have seen very good progress in recent years with renewables booming in some markets, notably in Vietnam, where good policy frameworks are put into place. We've seen very good success in expanding energy access to communities most in need, although this has taken a pause during the pandemic. We've also seen some very good policy-driven successes in the uptake of energy-efficient appliances and standards, notably around LED lighting and more efficient air conditioners in India. But looking ahead over the next 2 decades and thinking about the scenarios that the Deputy Executive Director presented, if we're looking at the stated policy scenario, which is today's policy settings, we would see rapid energy demand growth in emerging and developing Asia. So energy demand is set to grow by some 3% per year over the next 2 decades. Electricity demand increases at an even faster rate at over 4% per annum in this period. This is driven by some of the trends I noted above, but also notably some of this increased demand for cooling with household ownership of air conditioners more than doubling in Southeast Asia alone over that period. So like many fast growing emerging and developing economies, Asia faces the challenge of finding development models that meet the aspirations of its citizens while avoiding some of the high carbon choices that other economies have pursued in the past. And the falling cost of clean energy has created a tremendous opportunity to chart a different pathway. Under the stated policy scenario, looking out to 2040, renewables would be set to meet around 30% of the demand growth. But in order for emerging and developing Asia to meet its long-term sustainable development goals, this contribution of renewables needs to increase to over 50% by that time period. And this would need to be combined with dramatic efforts to slow and improve the energy intensity in terms of the use of energy, so to slow the energy demand growth. In order to keep the door open for the world to meet its net zero emissions goals, this progress would need to be even stronger than I've noted above. And for us, the way forward is clear. This means a massive acceleration in clean energy in order to help curb oil use for transport, to narrow gas demand to areas where it helps to bring down emissions, and most important of all, to slash coal use for electricity generation, which is a major source of emissions in today's energy economy.
Thank you so much, Michael. Felipe, over to you. What Michael said, right, about I think energy efficiency is going to play a very big role and is going to be the cornerstone of this transition. How does Schneider, and you play a big role, your organization plays a big role in that. So how does Schneider view the world in 2050?
So thanks for the opportunity. So actually, I was listening to the very detailed scenario of the IEA right before this panel, which frankly goes in the right direction. It shows how big is the challenge, which is to cut by 2 by 2030. I mean, many people are talking about 2050, but the first milestone, which is so important, is 2030, where we have to cut by 2 carbon emission. When we look at the IEA scenario and run it with our model, we are very in line with what's being said, with maybe a few differences or a few complementarity, which are mostly coming from when we look at energy planning. Many people tend to think about energy planning in the paradigm that we have today, which is we start from supply and then we see how it impacts demands. And we try to take it the opposite way by 2050, but also 2030, and really start from the demand side. And let me give you an example, for instance. We more and more are able to deploy net zero buildings. A net zero building is a building that over a year consumes as much energy that it produces energy. If you start to think the city of Singapore with just net zero building, what does it mean? That means that instead of having a centralized generation production, you have actually as many places of production as you have of consumption, and your goal is just to manage a mesh of prosumers. And suddenly your whole energy system is way different. So my whole point is to say energy efficiency, number one, has a massive potential, which actually we don't talk enough about, on top of renewable, which of course we have to go for, but in the end, the best watt is a megawatt. We have to start from that. And in complement to that, if you start to think that building data center industry can be prosumer, meaning points of decentralized energy production, and therefore participate to a hub and a mesh of prosumer economy, you open up a full new set of possibilities, and you think your energy system in a much different way. So if there was one point to retain out of that is to twist a bit the energy scenario towards more demand side scenario planning, and realize that in that construct, actually most of the technology are available today, which is great because these are just good news to help us reach the milestone of 2030 and then 2050.
Thank you so much. I think the point of the producers being the consumers, right, and buildings being net zero, I think is a great point for me to bring Frank on, because we were having a discussion outside, and that is one of your ideas. So Frank, do you want to talk about that?
Yes, maybe I use Singapore as an example, right? Singapore is land scarce, so we hardly have any utility scale type of solar. Maybe on the floating side, there are some large scale solar, but many of the solar deployment here we have is distributed. So, and it's on rooftops. Since it's on rooftops, then you have this whole concept of a prosumer, right? Where the building is actually consuming energy and producing energy at the same time. Currently, majority of the solar projects, to be honest, in Singapore is driven by the aggregated program from the Singapore government. For example, like the Solar Nova programs. Solar Nova programs, a big chunk of it is derived from the Housing Development Board. So an example of how we do it, we try to drive this program via a virtual PPA, right? Where you have a kind of a mismatch between the production of the energy. In this case, solar only produces in the day, so you have a lot of sunshine and then you produce energy in the day, but the consumption of the energy by the common services of the HDB block is not in the day, it's at night. So you have a large amount of the generated solar energy that goes out into the grid, and we take that energy and on-sell it to another customer, another RE100 customer, for example. All right, so there is some effort to try to do this synchronization where the production of energy is the same time as the consumption of the energy, right? To try to synchronize that. I think many of the RE100s in Singapore find a challenge doing that because firstly, we are land scarce. So therefore, the whole concept of importing green energy, having an increased supply, another tap to come in to supply this clean energy makes a lot of sense. So not really a one-size-fits-all type of plan, but I think we make do with what we can. Yeah.
Yeah. As for CDL is, I was reading about your company and its progressiveness in effective ESG integration has won you a lot of accolades. So what are some of the challenges that you face when you try to become more energy efficient?
Well, thank you for having me, and definitely we have reached a tipping point. Yeah, transitions to green building, low carbon economy, energy, clean energy is a given. The million-dollar question is how fast you can do it, and whether you can really, achieve the targets that you set. Every night, I can't sleep very well now since we actually set our net zero target in February this year, according to the World Green Building Council. In fact, for CDL, thank you for bringing up the history. And we started our sustainability journey as far back as 1995. And at that time, of course, we did not know that today, climate change become a mainstream agenda. So at that time, what we feel is the building sector was not really deemed as very eco-friendly. So what we did is let's look at how we can transform the business in a more, focused manner. How can we conserve as we construct? Conserve the, community, conserve the environment and all. But it became a fundamental, when we fast-tracked to 2015, Paris Agreement, and even today. It is still about conservation of energy, resources, and the community at large and all that. When we talk about real estate, we are not just talking about infrastructure, right? And because everyone here, even you are not in the real estate sector, you live, work, play, and use a building, right? And people spend about 90% of their time indoor. So how you use it is also very important. Yeah. And of course, building and construction, are responsible for almost 40% of greenhouse gas emission. And that also gives us the, opportunities to really drive change. Not just, we are a developer, we are landlord and all, but we have a much bigger ecosystem from upstream, the regulator, the investors, the, financial analysts, and downstreams to even our, our supplier, our consultant, architect, contractor, min-con, subcon, tenants, home users, everybody, we can reach out to them to drive change. So this is really the real estate, the obligations that we see ourselves. And of course, as a listed company, we also see that, the business case has never been stronger. With ESG track record, we really can tap into the fast-growing ESG investment, community, and then, of course, sustainable finance. All these are very important enabler. Money talks, okay? Like some of the previous speakers already say that technologies are there, but how can we apply it in an effective manner that it really adds values to the business? And, we have to look at the triple bottom line because we are a listed company, we are private sector. We have the obligation to maintain profitable so that we can provide employment and business to our, SME, supplier and all. So we must make sure there is a business case there. But when we talk about business case, it cannot be at the expense of the planet or people. Without a healthy planet, you won't have people to, support your business. So in fact, we've been looking at really everything. There are actually 4 pillars of our ESG strategy, which is very applicable to energy transition as well. Integration is very important. Alignment. Everything we do, we must have the mindset that zero energy is here. So everything we plan, we acquire land, we buy property, we build, we design, we manage. Everything we must have the zero targets, as this is the end goal. Then we have the innovation. Without innovation, without technology, you can't move the needle. Okay, and we set the target, actually, even 2018, we already set the Science-Based Target Initiative, SBTI, reduction target. If we use that technologies at that era, no way you can achieve it. So that is also why we set ambitious target is to help drive change. Every day we are actually chasing for new technology, new way of doing things, new solution, new practices. How do we engage, the whole value chain to drive change together? Yeah. So that is the innovation and investment. You must put money where your mouth is. You have to invest, not taking a short-term view. No return will come back tomorrow. We have to look at long-term. Then we have to look at impact. Whatever we do, there is an impact. So how do we track impact and how do we report and disclose? Because investors, there are a lot of investors out there are ready to pump money into, the green building or, climate action. But you have to display a very good, strong ESG report card in order to, have a share of the pie. Yeah. So we have actually looked at not just new building, we also look at old building. And actually, Frank here is very supportive of our greening one of our older industrial building. And we have already signed on the dotted line, right, the PPA. So by next quarter, the first quarter of 2022, we're going to turn this industrial building, reduce the turned about 50% of energy source to renewable, thanks to the Frank's support that we have the whole rooftop with installation of solar panels.
On your point of money talking, I'm going to bring we have a banker here with us, and I'm going to bring Eric in. And Eric, UOB is doing a lot of interesting work, and I particularly liked your idea of the ecosystem, right, which is so unique and is going to help bring up even small and medium size enterprises. So could you tell us a little bit about what UOB is doing? What is the trend in sustainable finance looking like in this part of the world?
Yeah, so if you look at this panel, the interesting thing is I'm sitting among my ecosystem partners, right? All the way from Schneider to Sunseap to CDL, right? And of course with the regulator. Now, the way we think about it is, first and foremost, it's very clear to us that what was a headwind for sustainability now is a tailwind. And year by year, this tailwind is going to gather more and more momentum as countries, national governments continue to clarify and increase their NDCs, the clarity of the national development plans, the decarbonization roadmaps, and that filters down to regulations, to incentives, to perhaps taxes. And what that's going to do is it's going to change the economic game, right, of what old economy versus new economy looks like. So as a banker, I like how Esther says it, we follow the money, right? If it's mainstream and it's commercial, we've got to figure out where the commercials are going to be able to help bank that economic activity, while at the same time understand where the old economy may be sunsetting and be able to manage that risk, both for ourselves as well as for our clients, right? So with that in mind, understanding that our role as a banker is to be able to help support and forge that sustainable future together with our clients, be they corporates or individuals, it becomes very clear when you work backwards what kind of products, services, financing frameworks you've got to be able to bring to bear. If you look across ASEAN, right, where does the big sustainable transformations need to happen in terms of either industries or asset classes? Renewable energy is a huge one, right? Agriculture, efficient industries around energy efficiency, and then our mega cities, green buildings, smart cities, right? And the way we go about it is therefore to say we understand what needs to be financed over the next 5, 10, 20, 30, 40 years, and we build the sustainable finance frameworks to be able to support that economic activity and our clients in it in as sharp and focused a manner as possible. Now, what we then do is we go one level down to say the large corporations know what to do. They've got the resources, they can figure out, hire consultants, come up with roadmaps. They'll know how to do it, right? But how do we then take the extra step as a strategic partner to our clients to make it as easy as possible to access sustainable financing? And this is where we come up with programs like you mentioned, USolar. USolar is an ecosystem play where we bring together the ecosystem, right? PV manufacturers, installers, together with corporate clients or individual clients to say, all you need to do is decide if you want to adopt renewable energy or not. Leave the hard work of bringing the village together to us, right? Say yes and just work with our partners, we'll be able to finance it. And that's how we think we can add that additional step of value in helping small, medium enterprises adopt, for example, renewable energy, as well as individuals themselves, right? Now, with the USolar program, we've had a lot of success. We focus on impact. We don't focus only on the headline financing numbers. So in terms of impact, we're talking about having helped avoid 110,000 tons of greenhouse gas emissions. For those of us who love trees, that's the equivalent of planting 1.5, 1.6 million trees over a 10-year period. For those of us who want to shift over to EVs, that's taking 25,000 cars off the road per year. So we focus on that impact, right? And it's working well, so we've been able to then translate these learnings from USolar to new ecosystem solutions like UDrive, where it's about supporting the EV infrastructure as well as financing of electric vehicles, as well as the one which we just launched, which is called UEnergy, which is all about energy efficiency solutions for asset owners, right? And so that's how we think about it, not just the financing, but how to make it as easy as possible to finance that change.
Yeah. I'm going to digress a bit now and talk about challenges, right? I mean, it's very clear that there is a lot of momentum, and companies like yours are really taking those steps, big leaps in the right direction. But we've seen in the last year, the challenges that are coming our way. We've seen the power crisis that we had in Japan earlier this year. We are going through another energy crisis at the moment, where we are seeing more and more countries turning to coal-fired power generation. Michael, at the International Energy Agency, what do you see as the challenges that Asia, ASEAN, is facing today? How do you balance these risks, right, which come along with transitioning whilst providing affordable and stable energy supplies?
Yeah, so before getting to the challenges, I just want to highlight sort of two major opportunities. One of them would have been apparent from one of the later slides that the Deputy Executive Director showed on the clean tech market. And what that slide didn't show is an analysis that we have in the World Energy Outlook, which shows about 45% of this clean tech market is found in the Asia Pacific region by 2050. So it's clearly there's a huge market on the manufacturing side, which is inherent in this region in terms of clean energy transitions. And this filters down along the value chain of the investments and the types of jobs which are created associated with that. So there is a huge opportunity, echoing some of the comments that we've seen from the other panelists. Of course, we do note a number of challenges in kind of realizing this opportunity. And part of this stems from our work in the World Energy Outlook. Part of this stems from the work we've done in a report on financing clean energy transitions that we released in June. One of those upfront challenges when we're looking across the sort of breadth and diversity of markets in emerging Asia relates to the cost and availability of capital. So we have heard good comments about the availability of sustainable finance, about the interest of investors to invest. And this is true in some places like Singapore and other places with relatively advanced financial systems or good policy environments. But for the majority of countries in emerging and developing Asia, they still face a relatively high bar in terms of accessing debt and equity finance. Now, some of this has to do with the financial conditions inherent in those economies, the macroeconomic conditions. A lot of it also has to do with the sort of policy frameworks that are in place or not in place in order to stimulate the massive investments in clean energy investment that we would need. And so just starting from kind of first order conditions, and we don't see across a number of economies that sort of clear vision or supportive policy and regulatory environment that could drive rapid change in terms of clean energy transitions. And when we mean rapid change, we're pointing towards that 2030 milestone that Philippe highlighted and the massive amounts of investments that would need to be made there. We see a number of broader cross-cutting issues when it comes to investing in clean energy. These can relate to the financial sustainability of the utilities in a given market. It can relate to the presence of fossil fuel subsidies, which can distort the market. It can relate to some of the challenges in terms of permitting, licensing, the administrative steps you need to take just to get projects going on the ground. And this is also compounded by a number of sectoral-based challenges. So for renewable power, the availability of longer-term contracts that can provide visibility over the remuneration over a project's lifetime. For energy efficiency, this has to do with having that sort of background energy performance standards put in place by the government, and then an ecosystem of labeling, of ways to monetize energy savings, and then the comfort of the different actors in that ecosystem with actually investing in efficiency and understanding the financial case for energy savings. And so in a number of economies, these steps are still relatively early in order to get these things moving. We would also need to see more progress in terms of investing in some of the technologies which are not yet commercialized. And so thinking about how do you start to finance large-scale decarbonization of industrial facilities, particularly in steel and cement and chemicals. Energy efficiency, electrification are important parts of that, but they can only get you so far, and you need to have more spending in terms of the innovation environment, in terms of developing the technologies and demonstrating some of these first-of-a-kind projects when it comes to developing clean industrial clusters, low-carbon hydrogen, and carbon capture and storage. Going back to the kind of financing ecosystem, we have seen exceptional progress in terms of the advent of sustainable finance markets around the world, but we note that the vast majority of issuance of sustainable debt, so green bonds, sustainability-linked instruments, et cetera, this has occurred in advanced economies. When we look at Southeast Asia, we see that Southeast Asia has contributed less than 5% of this, with some of it concentrated in relatively few good opportunities or good issuers. And another sort of trend that we see in terms of the development of sustainable finance globally is that the very good intentions to try to align portfolios with net zero emissions goals, this can also have the unintended consequence of excluding countries or industries with more challenging transition pathways. So those who are kind of at an earlier stage in terms of their decarbonization pathways. And a number of Asian economies and companies would fall under that rubric. And then lastly, I would just emphasize, and it goes back to the point I made in my first intervention, a big background challenge to all of this is the existing system, and notably the existing use of coal in the system. The existing coal power fleet in emerging and developing Asia is relatively young, at only 13 years old. Oftentimes these projects or these assets are shielded from competition with long-term contracts. So there needs to be ways to be able to sort of adequately phase out coal over the next decade with a lot of progress needed. And this is something we highlighted in the World Energy Outlook, which is necessary to meet net zero emissions goals. But this also needs to be done in a way which helps to transition and helps to retrain and support those communities and citizens who are affected by this dislocation. And of course, this requires a very long-term perspective, which is not just over the next decade, but over the next few decades to help those communities transition from the older economy to the new energy economy.
Thank you, thank you. Felipe, financing, of course, is a key challenge. Are there other challenges that your organization faces as you're trying to improve energy efficiency in this part of the world?
Well, first of all, I'd like to rebound on what Michael was talking about in terms of sizing the challenge that we have in this region. Just a few figures to set the stage. This region represents 9% of the world population, 5% of the energy demand. So one might say that there is still room to grow to get the fair share of energy demand. And then if you look at the period between 1990 to 2010, plus 230% in terms of carbon impact, which to me size or gives a sense of the opportunity we have in front of us, which is on one side, there is a clear appetite from this region to get to same level of development that we would have in some other countries, but do it with no carbon. So in front of this, there are many challenges, but there are many good news. And the first good news in our view is that solutions really do exist. And we've done a lot of homework in different end markets and so on. In the end, we believe the solutions are very simple. They rely on a combination of more electric technology, whether on energy supply or on the demand side, whether new build or retrofit, and more digital technology. That's what we call electricity 4.0, fueling the new electric world. And when we see now the big stake being how to deploy that, fair enough. The economy of Singapore and Indonesia or Philippines are not in a different place. Fair enough, you got example of new construction versus retrofit, and we have to customize solution for that, but solutions are available. And to me, the point, if I look really more at the positive side, is that solutions do exist, and you have more and more examples of net zero building, carbon negative data center, net zero industries that relies on more electric and more digital. And the last good news behind is all of this means sustainable and new jobs. Experts are saying that it's probably in this region in excess of 10 million new jobs that are sustainable, that you cannot export. So for us, many challenges, but the time for electricity 4.0 is now. And really sessions like this are really important for leaders to understand that technology is available, and leaders have to lead, meaning they have to embrace those technologies and take the risk to actually deploy. And to echo some of the previous panelists, our experience is that those technologies very often come at a marginal cost. And when you look at the full life cycle opportunity of asset valuation and saving across the life cycle, the business case is obvious. So time is now.
Thank you. Eric, over to you. Financing, as Michael mentioned, is a challenge, and ASEAN and all of Asia being as disparate as it is, there are clearly some countries which are racing further ahead and others that are left behind. As given your experience working with UOB, do you see that changing over time? Do you see that evolving and other countries catching up?
Yeah, absolutely. I think sustainability is a journey. It's an overused phrase, but it absolutely is true. And you can see with every single year, governments coming up and upping their commitments, right? So one of the things I don't have a doubt on is the directionality. Directionality is very clear, especially as the technology becomes more and more economical, and the pressure, right, both from society, companies, as well as fellow nations continue to press in. Directionality is not an issue. It's a question of pace, right? And this is where governments really can begin to up the pace by looking at, and I think it was mentioned by one of the other panelists, incentive structures as well as tax structures, and where you're having a misaligned economic outcome to where your sustainability journey as a nation or an economy needs to be going, right? Now, this is easier said than done, because obviously for a lot of the developing countries, you've got a lot of folks you want to continue to grow economically, and a lot of the ASEAN countries are very natural resource based in their economic model today. So, it's easier said than done, but you don't have to change the model overnight, right? It requires a level of leaders leading, taking a hard look at where they need to be pulling back perhaps on incentives, externalizing some of the costs of fossil fuel type economy, starting to really incentivize the transformation or adoption of greener technologies. And then the private sector all of our partners here and the banks, we know what to do. We absolutely respond to economic signals. But we also have to realize if the economic incentives are wrong, then it is unwise to expect private sector to commit economic ritual suicide in order to achieve a sustainability goal. So when we talk about ecosystems coming together, that big 800-pound gorilla in the room really is the government, their policies, their incentives, their tax structures, transforming how the economic model of our nations and our economies work.
Frank, you have, of course, invested in several countries in Asia. What is your experience? How has your experience been?
So first of all, I really like the point made where there is challenges, there is opportunities. So I think, again, in each market, you do see different challenges. So maybe I'll answer this question from a solar perspective, right?
Yeah.
So let's start from Vietnam, right? Vietnam did 9 gigawatts of solar last year. I think they barely did anything this year because of the COVID. We call it a pause. We are expecting new regulations to come out, but it didn't come out. I think the government is very busy with COVID. But there lies the opportunity, right? Where you have 9 gigawatts installed, and many of this in the south side of Vietnam, they are suffering curtailment now because of the grid congestion. So this year we grew 100 megawatts, not organically, but inorganically through M&A, buying some of these solar farms. And you have an opportunity to turn some of them around by adding energy storage systems in them to overcome some of these curtailment issues. Right? Of course, then now we look at Singapore. Singapore is, of course, land constrained, like I mentioned earlier. That's how we tap on the opportunities, how we tap on our neighbors. But of course, it has these other challenges like Malaysia just kind of stopped, they had an announcement that they stopped supplying RE to Singapore.
Yeah.
Right? But they have their own agenda in order to meet their own targets as well. So different regions, different markets, different challenges.
Sorry, Frank. I'm just going to say goodbye to Michael, and we just want to thank him because he needs to leave to go to another session. So thank you so much, Michael. And we still have a bit of time, so we're going to continue our discussion. But just wanted to say bye and thank you.
Thank you very much. Thank you, everybody.
Thanks.
Yeah, so I was just going on to China, right? So China is a huge market, and many ask, how would you, a small Singapore company, compete against the China big giant SOEs there? But the answer is really not to compete with them, but to work with them, right? So for example, last year, we set up what we call a QFLP fund, where we are joint GPs and LPs with the state-owned enterprise there. It opened up opportunities to work with the state-owned to look at utility-scale projects in China as well. All right. So why did they want us as part of the equation? Because many of the provincial governments in China are looking at foreign direct investments, something the SOE in China can never fulfill. Right. So it's really a very nascent solution to each of this market, so to speak. But I do agree that policy plays a big part. Right, maybe another market like Taiwan, right, for example, is a very protective market. Is one of the few FIT markets still existing in the region, right? The government, but currently is suffering its own challenge because the government has protected the market in such a way you can only use made in Taiwan solar panels for the Taiwan solar market. But as a result, the capacity of the Taiwanese manufacturers are low. And in today, where there is a huge spike in terms of mindset towards sustainability and investments into solar projects in Taiwan, there's a huge shortage of capacity. So if you have cash, you can't buy any solar panels today in Taiwan, right? So that is another challenge that we are facing.
Yeah.
Yeah.
Esther, what are your views on the policy framework across the region? What should the government be doing to support a company like yours to make real estate more energy efficient?
I think I'm not just looking at region. We have operation in 29 countries and the regions in the world. So we can't just look at Singapore alone or the region. We also look at the whole, global trend and all that. If I can just summarize it, in ABC, okay, A, very important, alignment, because we have to align with the global goals, the expectation, rising expectation of our investors. Now, asset managers, those who decide millions of billions of dollars investment are also asking that, not just asking you to have a climate strategy, but the net zero strategy. Otherwise, they will, probably decide to drop you from their investment. Okay, so this is, alignment is very important. Also, align with your own national goals and policy. Singapore's green plan is very stringent. Energy reset is one of the 5 key pillars. So we have our latest green building master plan. 80% of all buildings in Singapore will be, green by 2030. Now we are only about 40% So there's another 30% to do so by in 9 years. And also looking at super low energy, not just about green building. It's talking about super low energy, which is about 60% more, energy efficient than the 2005 building code. So there are a lot of changes, regulatory changes, and all these are threats and risks to business. If, all these are transition risks and physical risks. And the latest one is actually insurers. Insurance, premium are going high. If your buildings, your assets in different parts of the world are actually, having high risk for rising sea level, floods, and all that, your premium, insurance premium is going to be sky high. All these are about cost. So which lead to the B, which is the business case. Okay, investment, yes, you need to invest in long term, but there's also cost of inaction. If you don't do it now, you don't future-proof your business, the cost of inaction will be even higher. Okay. Last but not least is really collaboration. We can't do it alone. As a developer, we can't do it alone. We need contractors, suppliers, and bankers, financiers, and all those technologies, experts to come together. Without collaboration, it's very hard for us to move the needle. I think the biggest challenge now is actually the embodied carbon. SBTi, Scope 3 is a big agenda. World Green Building Council, embodied carbon is really a biggest challenge that we are looking at now. Because even for Singapore, 4 years ago, when I talk about sustainable building materials, a lot of people look at you blank. It's like, what are you talking about? But of course, fast track to today, the awareness is there. But whether the supply is as much as what we want, and also the cost is at the level that we can afford. Steel, cement, concrete, all these are the biggest, ticket item. Yeah. So we have to look at the impact. We also have to look at the cost and look at how to apply all this technology together. So this is really not easy to run a business. Yeah,
I can imagine. Well, I do, I cannot end this panel without talking about COP26. So I am going to come to that. But before that, Frank, and as I'm a commodities specialist, right? So I'm very curious about the solar industry and the impact of rising metals and minerals cost on the industry. According to our estimates, your capex is your cost is going to go up about 10% this year. How do you see that impacting your business in a big way, or do you just see it as a blip and it's going to come down again?
Actually, the cost increase is more than the 10%. So in the beginning of the year, and when you look at this Q4 deliveries, it's almost 30%, a gap there. So the price has increased in 1 year 30%. And this fluctuation comes from many factors, right? Of course, increased price of raw materials in the silicon, in the glass, and as well as the increased cost of energy to deliver the manufacturing. So, but I believe these issues, right, on a system level, it still can be resolved. All right, many times on a system level, we have integrated some buffer. So, for example, projects that we set out to deliver in 2022, we have kind of pre-booked our capacity before that. Although there is a slight price increase, on a system level, because of the buffer that we built in, it is still acceptable. In fact, in Singapore, our biggest problem isn't the solar panel price increase. Our biggest problem is manpower crunch. You have the solar panels, you have no one to install the
Yeah.
solar panels, right?
Yeah, yeah.
We traditionally depend on so-called foreign workers and our subcontractors who has the foreign labor to install them. So we went through an entire transformation exercise to look into hiring locals, training locals, certifying them,
Yeah.
right, such that they can replace, I wouldn't say replace because we are not talking about equivalent. So foreign workers, we don't think about a career path for them. Now we carve out an entire career program, right, for what we call solar technologists, right, from a junior technologist to a senior to eventually a chartered engineer, right?
Yeah.
This is what we sought to do,
Yeah.
and train these people such that they can overcome the manpower crunch.
My last question, and we have 2 minutes, and I want all your opinions, so it's going to have to be really quick. Felipe, COP26, what are your expectations?
Well, a collective, I would say Paris on steroid, and a collective confirmation and step up on the 2030 commitment to start with, because many people keep thinking about 2050, but 2030 is the first bar, cutting by 2 carbon emission. So the expectation is collective step up after Paris, but reinforcement of this, with possibly further visibility on government policies to help overall the business community that, in my view, has fully embraced the Paris Accord to accelerate the transition and the trip to 2030 and then 2050.
Thank you. Esther?
Yeah, I have the honor to be speaking on the Built Environment Day on the 11th November at COP26. I would love to fly the Singapore and ASEAN flag, that hopefully we can channel more resources, funding to help to drive zero together in the ASEAN region, which is actually a fast-growing region. Urbanization is huge, going to be the 4th largest economy and the 3rd largest population. Growth potential is huge. We can all drive zero together.
All the very best to you. What about you, Eric?
Yeah, I'd like to see a more clarity and development around decarbonization tools, particularly around carbon credits and thinking around carbon taxes, because I think that's how you really start to externalize and bring financing to the right projects. And so if we can get clarity on that, that would be really good.
Frank?
Yeah, I like to, again, having a common denominator, carbon, right, makes a lot of sense. Yesterday, I think Singapore just announced our Singapore Renewable Energy Credit Certification Standard, how this standard can be utilized in the region, right, not just in Singapore, and help everyone to speak the same denominator, I think helps a lot, yeah.
Thank you so much. And we're just on time. Felipe, thank you so much for joining us. And yeah, we're going to close the session now. I hope all of you enjoyed the session and found it as insightful as I did. So a very big thank you to all our panelists. Thank you.
And Mrigaka, thank you very much for moderating this session as well. Thank you all very much. And with that, ladies and gentlemen, we've come to the end of the Singapore-IEA Forum and wraps up day 3 of SEU 2021.